Last time we talked, you mentioned how you wanted to build Greater China as a secondary home base for Amundi, also doubling assets in the region. Where is Amundi when it comes to those goals, and what does that mean for your longer-term strategy in China?
I think overall, our objective for Asia remains unchanged, and also it's on track. And obviously, with all the investments we have made and which will be made further, we are doing all we can to contribute more to the Asian growth of Amundi, especially again through the Chinese entities. And as I mentioned already, right now, we are exiting this period of restructuring. We are now on a more sustainable ground, and the regulatory environment has improved very significantly. So we're entering now a new era with a more long-term and more sustainable growth. Basically, when you look at the two key segments I commented on earlier, FMC, WMC, basically each segment has roughly 26 trillion RMB in AUM, more or less equal. And combined, they represent 40% of the overall Chinese AUM, roughly 130 trillion. Combined, roughly 54. And basically, they're going to grow further, especially, I think the WMC will also continue to grow because the story is very short. The products of issued by WMC in the past was carrying an implicit guarantee. Now the products are all NAV-based, mark-to-market based. And actually, when you look at the number of investors in the WMC product, the number is very limited. For the whole China, you have less than 100 million investors in the WMC segment, and 95% of them are retail investors. So this is a very interesting segment offering deposit substitute products to bank clients. And again, when you look at the situation in China right now, the households still have more than 50% of their wealth in cash and deposits. With the GDP per head exceeding $10,000, we're going to see the acceleration of inflow into financial products. We're going to see more important reallocation to financial products. And another very important pillar in support of the growth of the industry is the pension business. We expect pension also to be a very important source of assets going forward in the Chinese industry.
With the US and China tensions, how are you as a European asset manager positioning yourself?
I think with the tension, geopolitical tension, and we see already that China is implementing a strategy named double circulation, international circulation, that has been on for decades, and also domestic circulation, betting on domestic consumption. I think with the geopolitical tensions, clearly we will see more and more domestic circulation. So meaning that China will beef up and strengthen the resilience of the market amid a changing geopolitical environment. And this is why, for this reason, as I mentioned earlier, it's key for global asset managers to get into this market with a setup that is seniorized, with a stronger technicity, with stronger autonomy, so as to stay there and capture the opportunities. Now, I mean, we've been operating in China since 1982, so more than 4 decades. I mean, we have already seen many challenges of different nature. And I think we have also acquired experience in dealing with different challenging situations. So I'm confident that with that in mind, we will also continue to navigate the new situation in a sustainable way. In general, I mean, the worst is not always certain in the future.